With just one day left of trading before the new year, we're taking a look at where things stand today and what might be driving the markets in 2026. Today, all three major indexes closed slightly down, extending a now three-day sell-off. As we now look ahead to what might drive the markets, joining us from Dallas is CBS News contributor Javier David. He is also the business editor at the Dallas Morning News. Good to see you again. Give us the bigger picture on where things stand right now in the markets as we head into the new year.
Well, look, at least for investors, the 2026 theme is laissez le bon temps rouler. And I'm a little early for Mardi Gras, admittedly. My French is a
Come
little
again?
rusty, but market players are very invested in this historic rally that's being carried by the AI wave. They fully expect this trend to continue here in Dallas. There are new data centers being announced practically on a weekly basis. Meta's deal this week to buy a Chinese-based AI company suggests that there's still a lot more room to run. Wall Street analysts are betting the house on it, and there was this great story earlier this week by Bloomberg showing how investment banking analysts are relentlessly, uniformly bullish on 2026. And even as we hold our breaths on the jobs market, there's just no immediate end in sight to this rally that is just really taken a lot of people by surprise.
Well, one thing that could catch investors off guard is who eventually replaces Fed Chair Jerome Powell. What are the implications of that decision?
Yeah, look, just this week, the president indicated he'd still like to find a way to dump the Fed chair, whose term expires in next May, even as he's busy kind of trying to find a replacement right away. But two things I think that really we need to keep in mind here. The president's problems may not or likely won't end with a new Fed chair because Powell may remain on the board for at least another couple of years. And there are all these existing divisions amongst a lot of the policymakers there. It's very consensus driven, the FOMC, mainly because some of these officials are very concerned that inflation is still way off target. And they want to pump the brakes on any more rate cuts. And so the incoming chair, whomever that person might be, will need to earn the confidence of the markets, and they will need to prove that they're not just sort of carrying water for the president. The economy's in this weird place where the labor market is soft. But inflation will trigger its stimulus and it will trigger more price pressures. And that's exactly what the Fed does not want. So whomever this new chair is, you may still have this problem where you have the consensus in one direction, even as the Fed chair and the president want it to go in another.
We have about a minute left, but you mentioned the price pressures, and I want to talk to you about that. I mean, there may be a lot of people watching who, look, groceries are more expensive, energy is more expensive, gifts, all of that blew well into the budget. What are some smart ways that we can start the new year fresh?
Pay attention to what you spent in terms of credit cards. A lot of us charge up on gifts and, buy now, worry about it in another 30 days when you get the credit card statement. But really kind of like pay attention to what you charged up. Make a good faith effort to pay off balances as they come in because those interest rate charges add up and they have a way of walloping you. So I say this all the time, no real mystery. And I think most people know this instinctively. But it really is when you're using credit, there's a really sort of judicious way to do so and doing it in a way that doesn't cost you a lot more than it would later on.
Walloping being the technical term. Javier David, thank you.
Absolutely.